At the heart of Africa's ancient coffee, Ethiopia is brewing a new future. Thanks to China's zero-tariff treatment, exporters are now accessing the world's second-largest economy without the barriers that once held them back. Track-on Trading is one of Ethiopia's leading coffee exporters. For years, they've been shipping specialty beans across the globe, but China's tariff lift has opened an even bigger door.
It's really good news because it will make our coffee very competitive in China market. If you think about, let's say, Brazil coffee or Colombia coffee, which are the main competitor for our coffee, their duty in China is above 8%. So Ethiopia is coming to zero. It will make us our coffee very competitive and to sell more volume of coffee in China market because it's affordable to our clients, as affordable to the consumers, the end consumers. Due to that, Ethiopia coffee in China is one of the famous brand coffee all over China nowadays. So it's really, really good news what the China government done for us.
For years, Ethiopian coffee has been prized globally for its unique aroma and heritage, but stiff tariffs often slowed its momentum in Asian markets. Now, Chinese demand for Ethiopian coffee is soaring, and with Latin American coffee prices on the rise, traders in Beijing and Shanghai are turning towards Africa's original bean.
Coffee from Brazil and Colombia has been rising in price rapidly, but we Chinese all know that Ethiopia is a birthplace of coffee. Its origin, combined with the strong and friendly relationship between China and Ethiopia, in the coming year, many Chinese coffee factories and traders are expected to purchase large quantities of coffee from Ethiopia, possibly accounting for around 50% of total imports.
Behind this trade opening is a broader strategic alignment. As Ethiopia joins BRICS, its government sees the tariff exemption not only as an economic relief but as an opening to build sustainable, long-term access to key markets in China.
With China's high market demand, especially for agricultural products like oil crops, previous trade restrictions are gradually being lifted. Through this zero-tariff agreement, we aim to secure long-term, sustainable access to the Chinese market. Our focus will be on strengthening trade relations with China and building a reliable export pathway.
This policy comes just weeks ahead of the 2025 BRICS summit. As BRICS seeks to create a fairer global trading order, Ethiopia's example shows what that might look like in practice. Fewer barriers, stronger partnerships and increased trade flows between the global south. Caroline B., CGTN.
Africa's rise in the global coffee trade has been building for decades, but the speed at which demand from China has accelerated has caught many observers by surprise. Ethiopian coffee, already considered among the finest in the world for its rich floral aroma and highland complexity, is now entering a new era as China becomes one of its fastest-growing buyers. This shift has pushed African exporters into a new strategic position, while traditional suppliers like the United States watch the dynamics of global agriculture change around them. Across Africa, coffee is not just an export commodity. It is a cultural asset, a source of income for millions, and an anchor of rural economies. Ethiopia, often celebrated as the birthplace of Arabica coffee, has long treated coffee as part of national identity. But what is unfolding today is a transformation driven not by tradition, but by geopolitics, trade realignments, and China's growing appetite for premium beans. In major Chinese cities like Shanghai, Chongqing, Guangzhou, Shenzhen, and Beijing, Ethiopian single-origin beans have become featured products in cafés, boutique roasteries, and luxury supermarkets. Chinese coffee startups increasingly advertise African highland coffee as their signature product, building brand familiarity around Ethiopia's unique flavor profile. The rising popularity is fueled by younger Chinese consumers who are shifting away from traditional tea culture, embracing global trends, and associating Ethiopian coffee with premium quality. This cultural shift is driving import volumes higher each year. African exporters have benefited from this change not only through rising demand, but also through China's strategic attempts to diversify agricultural imports. China is reducing overdependence on Latin American producers and exploring long-term agricultural partnerships in Africa as part of its broader Belt and Road strategy. With improved logistics, streamlined customs processes, and direct contracts between Ethiopian cooperatives and Chinese buyers, African suppliers are gaining access to a consumer base that barely existed 2 decades ago. The trend is so strong that Chinese investors have begun partnering with Ethiopian processing plants and roasteries to modernize equipment, increase output, and stabilize supply chains. This has led to upgrades in sorting facilities, improved packaging standards, and enhanced export logistics. Some Ethiopian regions now see coffee shipments moving through new freight services linking Addis Ababa to Chinese ports more efficiently than ever before. These investments have lowered costs and opened African farmers to markets that were previously inaccessible. As China increases its intake of African coffee, the United States, traditionally one of Ethiopia's key buyers, faces a shifting landscape. U.S. coffee distributors are not necessarily importing less coffee overall, but they are witnessing stronger competition from African-origin suppliers who now have more choices and higher bargaining power. American roasters who once depended heavily on Ethiopian imports must now navigate a market where Chinese demand can influence pricing, delay shipments, or secure premium lots before they reach U.S. buyers. U.S. agricultural players are not panicking, but they are concerned about how quickly China's demand is rising. Specialty roasters in the United States have already noticed that some high-quality Ethiopian beans are being purchased earlier in the season by Chinese importers, who are willing to pay higher premiums. This is creating a bidding environment where American buyers must act faster, offer better terms, or explore alternative origins. What used to be a predictable supply relationship is now becoming more competitive. What makes this development even more significant is that China's coffee consumption is still relatively low per capita compared to Western countries. The potential for growth is enormous. If Chinese coffee drinking continues to expand at its current pace, African nations like Ethiopia, Uganda, Rwanda, and Kenya could become pillars of Asian import demand. Analysts describe this as the beginning of a long-term structural shift in the global coffee landscape. African governments are responding by investing in value addition and branding. Ethiopia has been developing a national strategy to strengthen its identity in the global market, ensuring that its coffee is not just seen as a raw commodity, but as a premium cultural product. Branding initiatives, quality certifications, and improved traceability systems are part of this effort. China's interest has encouraged producers to elevate quality standards to compete at the highest levels of the specialty market. Chinese consumers are not only buying roasted Ethiopian coffee. Many Chinese companies are also importing green beans to roast locally. This allows them to tailor flavor profiles to domestic preferences, which include lighter roasts, fruit-forward notes, and packaging that emphasizes luxury. African suppliers benefit from this because it raises demand for higher-grade beans, pushing farmers to adopt better post-harvest practices that yield greater profits. While American farmers do not grow coffee on a commercial scale due to climate limitations apart from small-scale farms in Hawaii, they are deeply involved in the global importing, roasting, and retailing ecosystem. A sharp shift in supply routes affects U.S. coffee brands, grocery retailers, and chains that rely on consistent deliveries of specialty beans. Some American distributors are exploring new relationships with Central American countries, but they acknowledge that certain African beans are irreplaceable due to their unique characteristics. African nations are also using the rise in Chinese demand to negotiate better trade terms. Ethiopia has secured better cargo routes, more reliable shipping schedules, and expanded access to Chinese e-commerce platforms that offer consumer-level visibility. For many African exporters, China has become more than a beer, it has become a strategic trade partner. What makes this story so compelling is how quickly it has unfolded. Only a decade ago, China's coffee consumption was limited mostly to major cities and expatriate communities. Today, China is one of the world's fastest-growing coffee markets, with thousands of new cafés opening each year. African exporters have positioned themselves at the center of this transformation. The trend is not accidental, it is the result of deliberate strategy, cultural change, and shifting economic power. Ethiopian farmers are now gaining access to premium pricing they previously struggled to achieve. Cooperative unions report stronger sales, and some farming communities are reinvesting profits into infrastructure, solar drying beds, irrigation projects, and new seedlings. The benefits are not evenly distributed, but the trajectory is positive, and the potential for growth is substantial. China's enthusiasm for African coffee is influencing regional economies across East Africa. Uganda's Robusta beans are gaining traction in Chinese instant coffee factories. Kenya's washed Arabica is seeing increased attention from Chinese auction buyers. This shift also aligns with Africa's broader economic narrative: greater self-determination, expanding export markets, and strengthened ties with emerging global powers. The continent's agricultural potential is immense, and coffee is just one of several commodities experiencing a renaissance shaped by changing global tastes and trade flows. Meanwhile, U.S. coffee distributors are recalibrating. They remain key players, but they are facing a new competitive reality. Now they must adapt to a market where China is willing to pay more, purchase faster, and invest directly in supply chains. This is not a crisis for American agriculture, but it is a wake-up call that long-standing advantages can shift quickly. For Africa, the rise of China's demand represents an opportunity that is reshaping the continent's agricultural export strategies. For China, it marks a deeper engagement with African markets and an expansion of consumer culture. For the United States, it is a sign that the global economic center of gravity continues to evolve in ways that require new approaches and renewed investment in international trade relationships. The story of African coffee's rise in China is far from over. It is unfolding rapidly, driven by young consumers, globalized tastes, and transformed supply chains. It demonstrates how economic influence shifts quietly and then suddenly becomes undeniable. Africa, once underestimated in global agriculture, is now positioning itself as a competitive force in one of the world's most dynamic markets. As this momentum continues, the rest of the world, including the United States, will be watching closely.
You've been watching Echoes of Africa, where every story carries the sound of tomorrow. If this moved you, subscribe now, like, and share so Africa's voice never fades into silence.